The following was recorded in front of a live studio audience at the Studio 21 Podcast Café. This is the United Podcast Network.
Welcome to the Stock Market Authority Podcast. I'm Bakes, Kevin Baker. I'm going to teach you how to make money in up and down markets. Very few podcasters or coaches cover this. I'll show you how to lock in profits and minimize losses to make you a better investor. So once a week, you're going to know what's going on in the world and the stock market. Welcome to the Stock Market Authority Podcast. Morning, folks. This is Bakes, Kevin Baker, Stock Market Authority. Welcome. Hope you're having a great week. Boy, there's been a lot going on. So what we're going to talk about today, springtime for Bitcoin and Bitcoin versus banks. And boy, there's a lot to unpack there. We've had a crazy week, and I'll go into a lot of my new thinking there. Mailbag will go through your stocks, construction rental company, and a bank and others. And we'll go through the Stock Market Authority portfolio. I'll give you my update as I search for the 10 best ETFs to make money this year. We made money last year in a down market, and I'm working my tail off to do that again. But today's top story, Bitcoin beats banks. And this is, very interesting to me. Obviously, on October 10th, why do I keep doing that? March 10th. I did it on the way up here. March 10th, Silicon Valley Bank failed. And then on March 12th, Signature Bank failed. And so that's the Friday, Sunday. And then the following Monday, we saw crypto take off. But let's talk about the banks first. We talked about this last week, where there was a mismatch, where the assets didn't match the liabilities. They had deposits that they had to pay higher rates for. They had bonds that they bought that had low interest rates. Interest rates rose. The value of the bonds goes down. The startups at Silicon Valley Bank, to focus on them, they needed the cash because they're burning money. They had to sell the bonds at a loss. The equity evaporated, and the bank went under. And it looks like this has calmed down to an extent. First Republic was in the crosshairs. There's been a consortium of banks that have put in $30 billion in deposits, and it looks like it's calmed down. There's talk that the Fed is going to guarantee all deposits, at least for a period of time. That isn't official yet. That's what they've done in those particular circumstances, so that there wasn't a contagion. But it took a week to me to think about this. We're not out of the woods, and number one, when you have something as complex as this, there's reflexivity and there's ripples. It's sort of like butterflies' wings, and it creates a tornadoes in some other part of the world. You might have solved those banks for now, okay? And you don't have panic and you don't have a run. But you still have the ability to pull out your phone and move your low-yielding checking account to a money market fund, no matter where you want. So it isn't the old days where you had to go down to the bank and grab a satchel and take cash out. You don't need to do that anymore. I listen to podcast after podcast, and public.com is talking repeatedly about getting a Treasury direct account to siphon cash and put it into treasuries using public.com. And so we've gone from the phase where the banks have the mismatch, if you will, to now we're getting to the point where you still have deposits that are going out the door slower, but they're going out the door. And so how does the Fed combat that? In many people's opinion, they have to cut rates. Now, the Fed is meeting today at 2 o'clock. The inflation number that we just saw was 6%. That isn't 2%, which is what the Fed wants. So we're kind of we are kind of between a rock and a hard place. So we'll see how this all plays out. My point being is, although I would love to say the federal government is efficient and swift, I don't think they are. And I think that they've stemmed this problem, but the banks will continue to have issues as we go. The banks also, their business just got worse. They're going to have their insurance premiums go up. They're going to have more restrictions. They're going to raise credit standards. It's going to be a tough business. So you look at this chart here, you see the week of March 10th, they take the banks down, and then let's go to the Bitcoin chart. This is the ProShares Bitcoin Trust, which is the futures, but literally they closed the banks on Friday and Sunday respectively, and Monday Bitcoin went off to the races. So there is this is a clear breakout. It is a beautiful chart. It is acting better than all the other crypto coins that are out there. It is acting better than gold. I doubt this is the last bank to fail, and I think many people are sharing that view. Asset allocators everywhere are taking their money in from elsewhere and at least asking for a partial hedge of the banking system. And I am not a Satoshi's disciple, the originator of Bitcoin. I am not a wild-eyed libertarian that hates the government and believes that, a Bitcoin absolutist, if you will. But I know how to read a chart, and I want to make money, and I want you to make money in every single market, even if we go down. So I've seen this movie. This is a pretty chart with the volume picking up. The moving averages are moving up. People that will come back to me and say, well, Bitcoin isn't backed by anything. Well, gold's not backed by anything, and frankly, the dollar isn't backed by gold any longer. So all of this is a faith and a confidence system, and it is it's been called into question, obviously. I will always use a stop loss. I will never lose a lot of money, and I'm going to knock on wood on that one. But I will try not to lose a lot of money. And the other thoughts I had I literally said, I kind of blinked 3 times and said, I can't believe I'm saying this, but I'm buying Bitcoin. We just had, the main proponent of crypto and Bitcoin, FTX and Sam Bankman-Fried, do a perp walk. So you had, major shocks to the system. And I thought, and I've said it here on this podcast, that they're going to sell everything. They're just going to, grab cash. They're going to sell whatever is liquid, Bitcoin, ETH, whatever it is, to pay the creditors. And we just didn't see that. Bitcoin held in at 25,000. Now we're at 28,000 plus. This isn't just an American phenomenon either. Argentina, I read this week, has 100% inflation rate annually. And so if I'm the CEO of Mercado Libre, the number one stock in the Argentina fund that we own, the Amazon of Latin America, my suspicion is I'm going to have a percentage of my wealth in Bitcoin. And I think that's just going to continue, and we'll see how this plays out. But I don't take this lightly. I know it's a bit controversial, pun intended, but I think that this is really going to work. And so I'm making a calculated decision, and you do what you will. But this is what I said to my boys the other day, and my sons, Bobby and Jack, and I like you, but I love them. So that's how confident I am in this. Please do me a favor. Go to stockmarketauthority.com, sign up for my free newsletter so that in between these podcasts, I can keep you abreast of what I'm doing. Stockmarketauthority.com, sign up for my newsletter. There's a free video that teaches you how to sell that, believe me, is worth everything. And that's today's top story.
There's a letter in your mailbox.
You got mail.
Art from New York called in and said, what should I do with my UBS stock? And I know we talked about UBS stock recently, but as we, there's been a lot going on. There's been a lot of fur flying. Make a long story short, drink, Jack. They bought Credit Suisse, and I think they got a great deal. and they become a dominant force in Swiss banking. And so my quick question is, hold the stock. I have been very surprised by this for a long, long time. It honored this 18 support level very, very well. It held above the 150-day and 200-day moving average. It's got a relative strength of 85, which means it is stronger than 85% of the entire market. That's amazing given the way banks have acted. Banks look atrocious, as we just talked about. Now, those are obviously U.S. regional banks, but even the international banks aren't looking all that great. There's questions about all of them. This is rising on 6 times average volume as I printed this. It's above the 2015 breakout level that I talked about a little while ago, where it took out a 15, it launched from a 15-year base into new highs. And this is impressive, just absolutely impressive. So they like the Credit Suisse deal. The stock market the stock is acting really, really well. The volume is on the upside. You know, the sell discipline, I will keep an eye on this. If I see a break of the 200-day, I will change my tune and alert you. But from all my friends at UBS, I think this is a win, and this looks really, really promising. You know, always subject to change, but this is very, very promising. And if I was running a generalist financial fund, or I was a generalist fund and I needed financials, I would sure pull this off the shelf to add to that, because it is acting really, really well with a lot of blood on the street. So kudos to UBS management and all of the employees. I wish you nothing but the best. John from Boston asked me, should I buy DNOW? Now Inc. It's an oil services company. And, you know, I cut my teeth on energy in the 90s. It's really kind of helped launch me. And so I have a little bit of a soft spot for it, but I'm a capitalist down to my bone marrow. And so my sell discipline, which I've talked about, I'm happy to elaborate more down the road, my eye just goes to these key points. And so when I see a stock close below the 200-day moving average, I sell a third. That would have occurred at 11:37 here. The second third would have been at 10:07. The volume has been increasing on the down days, which I don't like, which is understandable. Oil has been acting lousy. It's in the 60s, down from the 80s and 90s. And, you know, that's just a tough, you need to have rising oil prices for these stocks to work. It's always been that way. It always will be. I don't have a macro thesis where oil is going to turn around anytime soon. So 1072 would be the price I would have been out at. 1061 is where we are now. I think it's unlikely this roars the new highs. And so I'm going to call them like I see them. I think that this stock is a sell to an avoid. Jack, my son from New York, said, Dad, what do you think about United Rentals? And this has been a horse, an absolute horse. They rent bobcats and cherry pickers and cranes and what have you. And I've always liked these businesses. Wayne Huizenga made a fortune on waste management. And, you know, the fact that people would pay you rent and then, you know, give you back the equipment at the end of the day, it's a good business. Now, you need to have construction activity. You need to have a decent economy. You need to have new projects. You need infrastructure to expand. I think some of that is happening. I did not like this drawdown. It held support at 373, which is good. And you need to have corrections. It's sort of like, you know, I did used to run. It was back in the 80s, but I ran. And, you know, you sprint and you rest, and you sprint and you rest, and you sprint and you rest, or sprint and walk. And I want the walks to be on low volume. Here, the volume picked up too much for my liking on the downside. It isn't critical. My sell discipline hasn't been triggered. This is an inexpensive stock. It trades at 12 times earnings, which I think helps the cause. So as long as it stays in here and builds another base until we get to the next earnings report and we get to see the upside here in the financial performance. I think it's a hold. I like it. I don't like that volume, but stay the course for now. That's it for the mailbag this week. If you want to write into the show with any questions or comments, please email me at bakes@stockmarketauthority.com. Even better, leave me a voice recording, and we can play your question on the show. Let's take a break. When we come back, we'll take a look at the SMA portfolio, Stock Market Authority portfolio, and I'll give you this week's Bakes Takes. You're listening to Stock Market Authority. Hang in there. We'll be right back.
Do you want to become a better investor? Do you want to learn how to make money in both up and down markets? Then you need to go to stockmarketauthority.com and sign up for our free newsletter today. Stock Market Authority is run by award-winning investment manager Kevin Bakes Baker. His aim is to save you time while teaching you how to be a better investor. Bakes saves you time by diving into all the latest stock market news and information so that you don't have to. He reads all the latest articles, analyzes the charts, and listens to all the relevant podcasts. And then once a week, he gives you a breakdown of what's happening in the market. Stock Market Authority is constantly outperforming the S&P and the HFRX. Bakes is going to share with you his weekly stock observations. He'll give you concise insights and show you how to lock in profits and minimize losses. Stock Market Authority is making money in up and down markets. Wouldn't you like to do the same? So join now and let Bakes show you how. Head on over to stockmarketauthority.com and sign up for our free newsletter today. That's stockmarketauthority.com, making money in up and down markets.
We are back, and today we're talking about springtime for Bitcoin in Germany. Now, I digress. Now it's time for the Stock Market Authority report. Thank you very much. No, I do what I can. I play a baritone on TV. Anyway, here's the portfolio. And again, I'm the only one that does this that I've seen, and I listen to everybody. But I, show you the real account, and this is what I tell my boys to do. And so again, I like you, but I love them. So I can't be more transparent or aligned, if you will. I continue to be the overweight point guard, dribbling down the court, and I will dish to the bullish side. I will dish to the bearish side. I have obviously dished to the bullish side of Bitcoin. So Bitcoin is now 20% of the portfolio. I'll talk about it a little bit more. I have the futures, and I also have the spot, and I'll dive into that if you want me to. We're 13% in energy, mainly in services, which are acting a bit better than oil and gas producers. But frankly, I'm not wild about this trade right now. 9% Argentina, 20% is Mercado Libre, 9% in Mexico. Walmart Mexico looks like an absolute horse. 9% in infrastructure, and their United Rentals Jack is the number one name in that ETF, and is acting pretty good. I like it. Platinum is perking up, whereas with all the precious metals, you're kind of seeing Bitcoin acting as a beneficiary of the bank fiascos and the precious metals, but they just don't seem to want to take off the way you would normally expect. And so maybe in this digital world, Bitcoin gathers what gold spills to an extent. It's a theme that I'm paying a lot of attention to, and I'll elaborate on if I find new data points to share with you. We're short Kramer, and from Matthew Tuttle. Matthew, thank you. And we're short real estate. And this is the other part of the bank situation is we've gone from the run on the banks where the deposits and the liabilities are not matched up properly. But then now you have to go to the fact you've got a lot of commercial real estate on the books. You've got a lot of work from home people. So you have office buildings that are vacant that have gone down in value. And what happens as credit, as the loans they've made on commercial real estate start to go south. So again, we're kind of starting to see the whites of their eyes a bit on that. That's why I think, it's bad for banks and it's good for crypto, Bitcoin in particular. We're 24% in cash, so this point guard still has the ball in his hand, and I will dish accordingly. But I put the Grayscale Bitcoin Trust chart here, GBTC, and this trades at a 35% discount to net asset value. I think mainly because people just sold it in the wave of FTX, and I can't blame them. But again, it's held in remarkably well given that scandal and crime, and that just means that if you took all the Bitcoin that was in the portfolio and sold it all, you'd be up. You'd have 35% more in terms of the cash that is worth at this point in time. I think that my suspicion is that discount narrows over time. I don't know if it goes to zero, but this is just a pretty chart. You've got a base after a 2-year decline, and the volume is picking up right when you want it to on the upside. The 50-day went through the 200-day on Monday. It is the 200-day is starting to creep up. It's about as pretty as they come. And if the chart didn't look like this, I wouldn't care about Bitcoin. I wouldn't be talking about it with you. So that's one of the great tiebreakers is this makes sense from a fundamental standpoint, from a macroeconomic standpoint, but let's go to the chart, and the chart is confirming what I'm seeing, thus the bullish stance on Bitcoin. So that's how we're invested right now. Please stay tuned, especially over the course of the week as I make changes. Let's get into this week's Bakes Takes. And my take is singular this week, but given what's going on with banks and financials to a lesser extent, I always like to focus on you, the individual investor, and the advantages you have over the pros. And so I put up here the S&P 500 and the different sectors. There's 11 different sectors as determined by, I don't know, some sort of tribunal at S&P. And as you would expect, information technology is the largest, 28%. And that makes sense given the success of Apple and Microsoft and Google, et cetera, et cetera, et cetera. The problem is that it creates perverse incentives where if you're running a fund as a institutional portfolio manager, you're gonna own. If Apple is 7% of the index, I'm making that up. I think it's around there. You're gonna be at 6 or 8. You're not gonna not own it, because you're going to get fired if you're wrong. And then you look at Apple and you go, it's got anemic top and bottom line growth, great products, great company, but how are you going to make a lot of money? So I just think that's interesting. Healthcare, I think, looks bad. Consumer discretionary, I'm not wild about. Financials are 11.5% of the S&P 500. So people have to be in financials as defined by S&P. And again, if it's 11, they might be at 9, they might be at 13, but they're not going to be at 0 unless they really have a lot of guts and a lot of job security. And so as you look at the Stock Market Authority portfolio, we own no financials, period, end of discussion. And I don't care, because I can read a chart and I say that is a bad neighborhood and I don't want to move in there. So I point this out that the pros have to hug indices. You do not, and I will not. And so they sure as heck aren't going to be 20% in Bitcoin. And I want to make sure that I'm on your side. I'm on your side, and I give you recommendations that I follow myself, that I recommend to my sons. And again, this isn't financial advice. You're smart people. I don't know your picture, financial picture inside and out, but I do know how to read a chart and how to invest so that hopefully my wife and I have a lot of fun down the road. And those are my big takes for the week. And, we talked about, talking about banks going to 0 is not fun. I get it. But, we have to live in the world we have, not the world that we want. but I always like to end with some much-needed levity. Please click the link in the description below. It's about 3 minutes. This is Shane Gillis, Cheeseburger Racism. Yeah, Dad, there's a little bit of salty language. It isn't bad, but it is funny. It is funny. So that's it for today's show. Please go to stockmarketauthority.com, sign up for the free newsletter. Please reach out to me, Bakes at stockmarketauthority.com. Fire the good, the bad, and the ugly. I got thick skin. And at Twitter, I'm at BakesTakes_. Hope you have a great week, and I'll see you soon. Take care now. Bye.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Café, the United Podcast Network, its partners, or affiliates.